Hi there, welcome to Grain TV. It's Tuesday, June 7th, another up day in the markets. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, front month July corn only gaining a quarter cent, beans up 4.5, and wheat up 3 in Chicago. There was more activity or more positive gains in the deferred months, especially in new crop November beans, which was up 12, and new crop Dees corn up 3. There was some rolling going on today as the Goldman roll starts to kick off as index funds roll out of July, thereby liquidating long July and moving into deferred months like September or December. So the news out today was, again, continuing to support the markets. Nothing really earth-shattering here to change the long-term outlook, but again, everything seems to be supporting this bull run. First of all, this morning, USDA reported another flash sale to China, this time 180,000 metric tons of new crop beans. Weather in Europe continues to be wet. There is a potential for a little dryness, but overall it continues to be wet and continues to plague the harvest and the potential quality of Europe's wheat crop there. In the U.S. winter wheat crop is starting to get cut. We saw Monday's USDA crop progress report showed 2% of the winter wheat crop was cut. We're seeing more harvest pressure in Oklahoma, where we're seeing basis levels really start to erode as a result of sort of slow movement into the export market, and overall just a really good crop. So that's somewhat problematic for the wheat market long term, that we continue to see a really good crop coming out of the U.S. wheat harvest. We still have plenty of old crop carryout that we're going to talk about here in a minute. And so you got to wonder how much further this wheat market can run, although right now the headlines in Europe are grabbing attention. In other news, in South America, a couple of key stories to watch there. First of all, Brazil's BRF, the largest poultry exporter in the world, said they are going to temporarily halt production at 2 of their poultry facilities because of the real high corn prices and the lack of available supply. So this is a temporary measure, but certainly supportive because it is, going to basically take the world's largest poultry exporter out of the market for a while, at least limit their supplies in the world market, which of course would turn attention to U.S. poultry supplies and in turn stimulate more demand for corn in the U.S. and soy meal in the U.S. Other news out of Brazil, there's a frost event that is likely going to happen in the next few days. A strong frost is expected in the southern part of Brazil, which could take a little bit of a top off of the corn crop there in the late seasons of its development phases. So overall, news today was, again, nothing earth-shattering. We are sort of marking time, if you will, until we get Friday's USDA WASDE report. And let's take a look at some of the numbers that traders are expecting. We're going to start today with old crop expectations. And in the case of wheat, we're at the end of the marketing year, and overall people are looking for a slight bump up in wheat carryout. Right now the ending stocks projection is 981 million bushels, up from last month's 978. I wouldn't be surprised to see that number top out at the high nines and come close to 1 billion bushel carryout. That is a large number, folks. That's not a small number. 1 billion bushels of wheat is roughly a year's worth of supply, and that's what we're carrying into this coming year's marketing year, with very good wheat prospects in the U.S. as well, and sluggish export demand. On the corn numbers and the soybean numbers, we look for a cut in old crop carryout. Strong exports in particular are the name of the game here, and so traders are looking for a fairly sizable cut for carryout in corn, 25 million bushel approximately down in corn and 15 million bushel down in soybeans. And we'll talk tomorrow about new crop projections. But let's turn our attention to this wheat market that has really been sort of on this upward trajectory in the last 5 days. And we're really starting to get up into a level that I think is going to pose stiff resistance. If we look at the daily July wheat chart in Chicago, you can see us bounce off those lows that we've traded at for so long in that 450 to 460 range. We took off from there in the last week of trade and are now getting up to that mark of 518.5, and that's where the recent high is on the chart, and the best price we've seen in over 6 months. So that, in my opinion, is going to prove stiff overhead resistance, because right now we continue to see very, maybe not dismal, but certainly disappointing export business in light of the change in the US dollar. We are coming into wheat harvest full gear, and that is going to pose problems because we're hearing the stories about stocks or storage problems, the lack of storage space, and that wheat is really going to be met with sort of weak basis as a result of farmers delivering on the spot market. So look for this potential point, 518.5, to potentially pose significant overhead resistance. That's all we got for today. As always, if you're interested in learning how we can help you in your own grain marketing situation, visit us online at grainhedge.com and see how we might be able to help you. As a GrainHedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.